So one of my YouTube subscribers, he had asked me the difference between the pivot point and the buy point. And I made a video. It was about understanding the difference between the retail supply and the overhead supply. If you understand those two concepts, you will understand the difference between a buy point and a pivot point inside the base. One of my another YouTube subscribers had asked me, what is the difference between retail supply and overhead supply? That has been covered in the same video. This video is more specific. This is about the cup and handle base, but inside the cup and handle base, there is a pivot point and there is a buy point. Sometimes the pivot point and the buy point are the same, but sometimes you get a separate pivot point and a separate buy point. Now, in this video, I will not discuss retail supply, overhead supply that we already discussed. This is more pictorial. Okay, I will take you to a chart and we will go to MarketSmith. We will also look at TradingView, the same chart, because I want to show you how MarketSmith will mark the pivot point and how Mark Minervini would look at the same chart and mark his buy point. Okay, so let's go to a chart and it is Muthoot Finance. Okay, so back in March 2024, I think Muthoot Finance broke out. Now, just because I am showing you the stock doesn't mean that I had bought the stock. No, this is just an example to show you. And remember, just because the stock is forming cup and handle doesn't mean that you buy. You have to look at fundamentals. You have to look at, sorry, you have to look at fundamentals. You have to look at comparative analysis. Imagine the stock has a nice cup and handle base. It is a stage 2 stock, but the relative strength is only 65 or maybe 55. Will you buy the stock? Forget buying the stock. The stock would not even show up on your filtered list because you are only looking at stocks which are having relative strength of more than 70. So consider this as an example. Okay, this is very important. So let's look at Muthoot Finance. So have a look at this. I will enlarge this chart. Have a look at this. See, there is a cup and handle. See, they have drawn this green line. That's a cup and handle, and they mark this level. So that's 5th of March 2024 candle. The high of that is their pivot point. So they have written pivot as 1527. Okay, this green line that is considered 1527. When you see the upper box that they open, there are two boxes that open when I click here. The first box shows you pattern which says cup with handle. The second, it says stage, which is base. Basically, it should not be stage. It is base number 1B and the pivot is 1527. Okay, so the high of this candle. Okay, that's the cup with handle. So they have drawn this nice cup and the handle. When the stock breaks out of here, it goes up. Okay, now in this case, just because there is a cup with handle doesn't mean that you buy the stock, because if you see when I click here, see the relative strength of the stock is 42. That second box that opens below, go to the last line. See, it says RS42. So it's RS42. Okay, so you wouldn't buy the stock at that level. Okay, maybe you would buy in the next or the subsequent base. Okay, but you would not buy it at that level. Okay, because the stock is not ready yet. Now you might say, Rohit, if you don't buy, then you miss out on this rally. Correct? Agreed, fair point. But try buying 10 stocks with a relative strength of 42 and tell me what is your experience. Okay. So historically, it has been proven that stocks with relative strength of more than 70 or 80 increases your odds of success. In this case, the stock gone up, that's luck. That is not skill. Okay. Because this is not the right time to buy the stock. The relative strength of the stock is poor. But just for example, I have chosen this chart because this is a nice cup with handle and there are some buy points inside the base. So I want to show you this on TradingView. So let's go to the same chart on TradingView. Okay, so this is when did the stock? March 19, 2024. So let's go there. So I will write Muthoot Finance. March 19. So let's see, where is Muthoot Finance? Cup with handle. Yeah, here. See, March 19, 2024. This is the cup with handle. Yeah, as you can see here, 1527. The high of this candle is 1527. So let me draw the cup and handle with you. Okay. So for example, let me let me hide this for you. Yeah, now it looks perfect. Okay. Let's draw the cup with handle. Okay, so as per Market Smith, their pivot point is this, but our buy point is this. So if I draw the base for you, see, this is the base. Let me mark the points for you. This is point 1, that's point 2, that's point 3, that's point 4, point 5, point 6. That's a mother baby candle. So our yellow line is here. So I'll draw the yellow line here. That's our buy point, correct? At this level, somewhere here, the high of this candle, that's a buy point. But the pivot point is here as per William O'Neill and Market Smith. So now you understand the difference between pivot point and the buy point. It has got to do with retail supply and overhead supply, which I explained in the previous video. So that's why I will not cover here. So my method is to count the number of points and the number of contractions inside the base. Okay. And then I will mark my buy point. But the pivot point is generally higher than, so this is the pivot point, is generally higher than the buy point. Because by the time you reach the pivot point, you are very close to the point number 1 where the overhead supply is small. So now you see the difference. The blue line is the pivot point, the yellow line is the buy point. Okay. And let's draw the cup with handle. I will remove this. Let me draw the cup with handle. My drawing is very poor, so pardon my drawing. I will take the brush. So from here, it goes like this. So nice. Here, cup begins. That's the handle. Yeah, that's the cup with handle, and that's the pivot point. Okay, and that's my buy point. Okay, and then look what happens. See, now you can see the yellow cup with handle. This is the nice cup with handle. That's the pivot point, and that's the buy point. Tell me which point is a better buy price. The lower yellow line, the buy point is a better buy price. So on this small green candle, sorry, anyways, let me remove this. Okay. On this, at this area, on this small green candle, probably there was a opportunity to buy the stock. Plus, if we draw another yellow line at the top of this yellow line, there was an opportunity to buy the stock, provided the relative strength and everything was fine about the stock. Purely technically, my criteria speaking, I would have never bought the stock simply because of the relative strength. But if at all you come across such kind of a situation, okay, you could buy the stock at this level or very close to that level. Okay. By the way, there is another buy point here. If you notice, see, that's a mother baby candle. So this is the breakout. So this buy point has come before this buy point. So there are two buy points here. You could add maybe 50 shares here, another 50 shares here, provided this is in the blue zone or the green zone. Let's check that. Yeah, it's in the blue zone. Blue zone 4 points. So it's a slightly risky trade. Okay, but if that in that if it was a confirmed uptrend, it is not a risky trade because every other stock is going up. So now you can see the base has been drawn, the cup and handle has been drawn, the pivot point is there. There are two buy points in the base. So if I want to buy 100 shares, probably I would buy 50 shares here, another 50 shares here. Or if I feel this point is risky, I will wait for the price to enter the green zone and then I would buy the stock maybe at this green candle as it touches the yellow line, maybe a few shares. Then on this candle, as it is inside the yellow band, that would be still risky because the price has opened above the buy point. Whenever a price opens above the buy point, your risk goes up. Doesn't mean that you don't buy the stock. You could buy the stock, but you have to buy small because you are unnecessarily taking risk. The moment the stock opens above the your buy point, which is the yellow line, and you buy, it could come crashing down. That is why you have to be very careful. The stock has to cross your buy point from below. Okay. So remember, these are important points I wanted to discuss with you. I wanted to draw it and show it to you so that now you understand what I am looking for. There is a difference between the pivot point marked by Market Smith and the buy point identified by Mark Minervini as per his VCP system. Okay. Is not a perfect VCP because the volume is all over the place. But you now get the point, right? Now you now understand what we are looking for here. These are little nuances that you need to master. Sometimes you might get an early entry, and if the market is in a confirmed uptrend at that point in time, nothing wrong in taking the trade. Okay. So I hope this video answers the question that one of my subscribers asked. Can you explain the difference between the pivot point and the buy point inside the cup with handle? This is a perfect example of that. Take care.